All right, well, a sense of stability has returned to the markets as fears over a looming banking crisis begin to ease and as bank regulation now remains top of mind for U.S. lawmakers. Meanwhile, the crypto industry is going on the offensive and some speculate that the White House is trying to push it out altogether. Let's bring in O'Leary Ventures Chairman Kevin O'Leary, also known as Mr. Wonderful, for his take on all things bank and crypto. Wonderful to have you in studio here. So first I want to get your take because I know when you were first hearing about sort of the FDIC taking off these guardrails, you were like, look, what's the point of investing in some of these bank stocks? What's your take now, especially in what you're hearing from these hearings?
I think the question every American taxpayer has to answer individually is, do you want to guarantee every tiny bank in America? Because you're being asked to do that. You know, it's great when politicians say, oh, don't worry, the taxpayer's not paying. Let me explain exactly why you, the taxpayer, are paying. FDIC insurance is paid by banks. The banks get that money by charging you fees in your account. You paid for all of it. And so now, just to count the record here on Silicon Valley Bank, that cost you as a taxpayer $20 billion, 16% of the FDIC insurance pool. It's gone. So you can only do that 10 more times and there's nothing left. And so why do we need 5,000 banks? What do we need that for? That's a great question. Now, if you like the idea of riding your horse up to a bank branch 100 years ago, that's great. Or maybe you say that it's unique to the economy of a singular state, and you have to have a unique banker to take care of an agrarian society, or maybe a tech society, and or economy in California. But we don't need that anymore because 97% of bank transactions are done online.
Right.
So we need an oligopoly of well-regulated, imputedly guaranteed, because the law says 250. And so that's the narrative. If you take a poll in this building, whoever's walking around here, and say, do you want to guarantee the next bank in California with your own money that's going to zero because it has idiot management? I think you'll find 9 out of 10 people say no. We're going to go through a metamorphosis. We're going to see a consolidation of all these tiny little banks into super regionals. Maybe we get down to a couple of hundred banks in America, but I personally, as a taxpayer, have no interest in guaranteeing the next idiot management. Don't want to do that.
But then what does that do for lending conditions and for customers as well if we do have this sort of compression?
Nothing. The whole point is it might have made sense to have these regionals when you needed that touch pace, you know, where you said, oh, I know every family in this geography, in this city, and I'm a banker, and, you know, I support the local baseball team. Nobody cares about that anymore because they do everything, including getting their credit card online. Over 97%. That is an old kumbaya, warm and fuzzy feeling of America in the 40s and 50s. That's not what we are today. We are a very competitive online banking community that has to basically bear the cost of compliance. All of these new rules are going to be imputed now as a result of these investigations, will make most of these banks unprofitable. I would argue that bank stocks themselves are just a trade. They're not good investments. These are going to become highly regulated utilities. And it's the only sector of the 11 sectors of the S&P 500 that services the other 10. So it's simply a utility. Let's get over it. Let's regulate it and stop kumbayaing about all these tiny banks that are going to zero for sure.
But Kevin, you do have some people who perhaps aren't as tech savvy, who aren't into digital banking, the unbanked. Some of those people perhaps more interested in something like a crypto or some other sort of function. So you're saying that we really don't need these regional banks anymore? You
know, I heard that argument pre-pandemic in 2021 when everybody was locked in their condos. Oh, grandmothers, what are they going to do? They can't go shopping anymore at the local grocery store. They got hip to their cell phones. They went online and they ordered their groceries, or they starved to death. Choose one. The same thing with banking. Everybody has their app on their phone and banks that way now, whether you're corporate, whether you're individual. You know, let's have a moment of silence for small regional banks. They're dead. It's over.
Well, with that in mind, then, I mean, obviously, we're still sort of passing out the blame, and I guess we'll hear a little bit more from some of these regulators on May 1st. But I do want to shift gears and talk crypto. Obviously, the CFTC now cracking down on Binance. A lot of people thought perhaps Binance would be okay after FTX's collapse. But people had an eye, though, on what CZ was doing. How worried should we be about this, not just for the crypto industry, but who's going to be the next platform that's really going to draw the ire?
I think the story that's emerging as of yesterday morning, when these charges were laid, is an incredible Greek tragedy. And I'll tell you why I look at it this way. The two pioneers that created this nascent industry and made it global, Sam Bankman-Fried and CZ. Then they went to war against each other, just like in Greek mythology. And one of them won. CZ definitely bankrupted Sam Bankman-Fried by using the FTT token in the last stroke on that November 6th, 550 million right into his heart, and he had to, declare bankruptcy. Then, of course, all the allegations and all the charges. And now he's victorious, but only for a few weeks.
Right.
Because whammo, the regulators come after him, and this is why it's a death knell for Binance. Just follow these dots, and there's a great investment opportunity emerging here. So now you're Binance, you're a global leader, but you've got the American regulator charging you. And that means every other regulator wakes up around the world that has to do business in the United States. So let's say you're a sovereign wealth fund in Norway, in Abu Dhabi, in Saudi Arabia, or any country where you want to put $250 million to work a day. Those are the kind of numbers. Goes through the depository in New York into the S&P 500.
Right.
You have to remain compliant with the SEC. The SEC and other regulators in the U.S. have just said, this company is not compliant in our jurisdiction. What are you going to do? You're going to say, listen, CZ, love you, honey, but I don't think we can give you a license here to resolve this thing in the United States. And then the U.S. regulator says, and this is where it gets really interesting, and this is the really Greek mythology part of it, even though Sam has been wiped out by this, the reason he had to buy CZ out was to get CZ off his balance sheet because CZ wouldn't disclose who owns his company. Highly speculated to be the Chinese government. Now the U.S. regulator is going to say, okay, pay us the $8 billion fine or whatever they're going to impute, but disclose your cap table. And if he has to do that, either he won't or we'll find out the Chinese own him, in which case he'll never get an American license. I think it's game over, checkmate for CZ, and it's only a matter of time till there's a run on that BNB token, $64 billion. Now, either the Chinese government is backing that token or they're not. But if there's a run on that, it's sayonara CZ. Then here's the investment opportunity, and I've got my guys doing this everywhere. Find me in every jurisdiction where Binance is operating supposedly under a compliant license,
right,
and find me the number 2 regulated environment, the number 2 regulated exchange. Let me invest in that. Because when CZ sails off into the sunset back to China, I want to invest in that. Starting in Canada, France, Switzerland, Abu Dhabi, wherever it is.
Right.
We're watching the end of a great Greek tragedy. The two guys, the founders, they killed each other. It's fantastic. This is a wonderful Harvard case. I'm going to teach it.
It makes for good TV, but not so good for retail investors sort of stuck in the middle. I do want to ask...
You've got to get your money out of Binance El Pronto. Are you kidding? I mean, the U.S. regulator just hit him with charges 24 hours ago. Did you see the evidence? Unbelievable. I don't know how he's going to get around it. Look, a moment of silence for Binance.
But before I let you go, I do want to get some of your previews for Q2. A lot of people looking for investment opportunities in the upcoming quarter. Where are you putting your cash to work?
About a third of it, we had a real challenge with all the regional banks because we had to take it all out of there. Because I have 54 portfolio companies. I called my CEOs and said, look, how much did you get? How much was in Silicon Valley Bank? That we dodged a bullet there. What else do you have? Do you have anything in First Republic? Get it the hell out of there. Any regional bank, get it out of there. Choose the 4 money center banks for now. I want all of the money I invested in you in those 4 money center banks. I am not the only person that did this. So we pulled a lot of cash out of these regionals or investment dealer brokers, and we're rolling T-bills right now at 90 days. And this is happening all over America. This is why I'm telling you, there's a death knell to small regional banks, because no matter what you say or what Yellen says or what the president says, you can feel good about a regional bank. Okay, you feel good about it. I'm taking my money out of it for now while we work all this stuff out. On the crypto side, I think it's going to be a renaissance. I think the opportunity to invest, because all of these compliant exchanges, take the Canadians, they made no money because Sam Bankman-Fried and FTX and Binance, they operated with impunity with no cost of compliance.
And just so we're clear, are you talking tokens or the exchanges or perhaps underlying
everything?
blockchain?
Dealer brokers or broker-dealers are tied to an exchange that had to be compliant, bore millions of compliant costs in each of their geographies. And, Binance didn't have to pay any compliance. And that was great while you could do that. But now you've got every regulator on earth saying, whoa, the U.S. just said this is not a compliant platform. And as a result, I think that puts a lot of pressure on everybody to say, well, where's the next compliant one? Because you know what's amazing? I'm going to make a speculation here that I think I'd love to go back forward 5 years. All the players that are not in harmony with their regulators now, that were the founders of the crypto industry, they're all going to be swept aside. And a new generation of crypto banker will emerge just like old bankers used to be, totally compliant. It's that old Who song, won't get fooled again. Are you going to put your money in a non-compliant crypto exchange that is it at war with its regulator? I don't think so. And this is good for crypto. This is the next stage in making it something real that you can invest in. I'm giddy with excitement. I think you can tell that. I'm energized today. I knew this was going to happen.
Yeah.
And I think it's wonderful that now, hopefully, my investment thesis about buying into all of these regulated exchanges, which has done nothing for me for the last 4 years, all of a sudden everybody's waking up saying, okay, what do I buy in Abu Dhabi? What do I buy in Canada? What do I buy in France?
Because a lot of people are still waiting for the use cases here, and it may seem like the long game, but interesting. We'll be keeping an eye on what happens with this next generation of crypto leaders.
Last thought, use case. My best performing asset in the last 4 months, Bitcoin. Where do I hold it? On a Canadian exchange.
Interesting.
That's compliant with the OSC order. Yes. I think there's a great use opportunity for crypto.
Yep. As long as you stay compliant.
I'm excited.
I couldn't tell, Kevin. Yeah. O'Leary Ventures Chairman Kevin O'Leary, thank you for joining us this morning.